AMD CEO Lisa Su had strong words for anybody who thinks artificial intelligence is overhyped. She says they are completely wrong. In the interview, Lisa Su gave more updates to AMD stock investors that could have huge implications. In this video, I'll review those latest developments and what it could mean for AMD stock investors. Let's take a look. I want to thank The Motley Fool for sponsoring this video. Visit fool.com/parkev for the 10 best stocks to buy now. All right, so here's the comments from Lisa Su saying that she had two words for people who think artificial intelligence is overhyped. She says they are completely wrong, she said with an interview with Time. And I tend to agree with her statement. I think artificial intelligence spending is just getting underway and we have a long way to go. She went on to say that having lived in the tech business for the last couple of decades, every 10 years or so, we see a major arc in technology, whether it was the beginning of the internet or the beginning of the PC or beginning of the mobile phones or the beginning of the cloud. AI is one of those trends. AI is bigger than that, in her opinion. That's a pretty shocking statement, right? For AI to be bigger than all of those predecessors. Those are pretty big things, right? The internet, the personal computer, mobile phones, those are all huge. And for the CEO of AMD to say that AI will be bigger than all of those, that's a pretty strong statement, to be sure. The reason she says that is she thinks that how it can impact our daily lives, our productivity and business and research, all of those things are going to exceed the benefits that were provided by those predecessor technologies. Now, during the interview, the CEO highlighted AMD's latest MI300X, which is a graphic processing unit designed to support generative AI technologies, that this technology is going great. When they launched the MI300X last year, they had Microsoft, Meta Platforms, and Oracle as partners that came together to build great solutions, and that's their approach to the market. Still, they have a relatively small market share in the generative AI use case for GPUs. NVIDIA has an estimated 80 to 90% market share in this category. Even with that relatively small market share, AMD set record data center segment revenue of $2.8 billion in its latest quarter, which was up 115% year over year, driven by the steep increase in this GPU shipment and strong fourth quarter 4th gen CPU sales. This is on top of the company's other segments, which are not doing as well. You can see the gaming segment revenue was down 59% year over year, and its embedded segment revenue was down 41% year over year. That's the primary reason why AMD's stock price has not exploded the way NVIDIA's has. AMD's business is benefiting from the rising effectiveness of AI, but nowhere near the level that NVIDIA is. However, this new GPU and CPU combination will likely give AMD a boost. At least that part of its business will continue growing robustly. According to an analyst on Wall Street that's following AMD stock, they say that AMD is off to a remarkable start in the AI market, but it could be tough to carve a bigger niche between NVIDIA's 80 to 85 plus market share. The company has a 15 plus year software development lead on one extreme and the roughly 10% market share presence of cost-optimized, custom-specific integrated circuits. Now, that's one of the primary reasons why NVIDIA has dominated this generative AI data center market is because of the software, the CUDA software that NVIDIA has been developing since the early 2000s. That supplement really makes its GPUs more powerful and more integrated into the entire ecosystem and gives it a stronger market share advantage and makes it tougher for competitors like AMD to take share. However, this analyst says that if AMD is able to show a path to just even 10% market share by the calendar year 2026, the company would add around $5 billion incrementally on top of its $12.6 billion in sales, with its earnings per share coming up to $8.50 at the midpoint, compared to what estimates suggest could be $7.37. So an extra $1.13 of earnings per share upside for AMD in 2026 if it achieves just 10% market share. Now, 10% market share is not that big. AMD is going to get the benefit of companies wanting to diversify away from NVIDIA, because companies do not like when one business has that much market share. It exposes companies to that supplier risk. NVIDIA could exercise its pricing power and say, look, we know you're desperate for our GPUs. If you want them, you're going to have to pay this much extra to get our GPUs. And if enterprises don't have another option, they just have to pay whatever NVIDIA asks. So just for that reason alone, enterprises are going to give AMD a chance, even though they know that AMD is not up to par with NVIDIA. They're still going to give AMD a chance as a potent competitor to NVIDIA. And so assuming AMD can capture a 10% market share by 2026 is reasonable to assume. I highlighted earlier that AMD stock is not performing as well as NVIDIA, but it's still doing relatively well. It's up to $170 per share as of this recording. That's up from a little under $150 per share to start the year. It just makes it look bad when you compare it with NVIDIA, and NVIDIA is soaring and AMD is so far behind. It makes you think, wow, how come AMD is not anywhere near NVIDIA? But it's hard to compare any business against NVIDIA. What NVIDIA has achieved in the last couple of years is truly unprecedented, and so it's unfair to compare anyone against that. Still, AMD making good progress, making steady headway, and the success of this next generation GPU and CPU for AI optimized servers should be a nice benefit for AMD stock investors longer term. Hey everyone, I'm excited to announce that my book is finally available for sale. I've been working on it for more than a year now, so I'm really excited to finally share this with you now. It goes through my framework for evaluating stocks. Some of you often ask why I like this stock or why I like the other stock. And this framework provides you the things that I look at when I'm evaluating stocks. I've added the link in the description below.